Howdy, everybody. Welcome to Liberty Call. Today is Thursday, May 15, 2025. Hope you're having a fantastic day out there on the interwebs. It is a beautiful day here in Colorado. The sun is out. The breeze is cool. I mean, it is amazing. I mean, it is, you should be here. No, I've only got 2 extra bedrooms, but I got room for 2. Well, 4 if you want to double up. So anyways, all right. Well, markets inch higher as solid earnings from Walmart and Cisco helped offset jitters over tariffs and a criminal probe into United Health. The Dow climbed and the S&P flirted with record highs, and the NASDAQ took a breather. Fed Chair Jerome Powell floated a rethink on inflation strategy, while retail sales and jobless claims showed the economy still has legs. So before we break all the news down for today, you can see my security detail back here. But I need some help from you. If you could do me a favor, give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell. All righty. Let's get into the markets. Again, it did it like it has. When the NASDAQ is in the red, the Dow is in the green. When the Dow is in the green, the NASDAQ's in the red. Again, we're back in that same cycle again. The Dow Jones starting out was up 0.65%, 271 points, closed at 42,322. S&P 500 up 0.43%, 25 points, closed at 59.18. NASDAQ down 0.18, 34 points, closed at 19,112. The VIX fell 4.14% today. It's at 1785. Canada was up 0.8, Brazil up 0.67, and Mexico up 0.42. Headed over to Europe, Germany up 0.65, the UK up 0.57, France up 0.21, Netherlands down 0.03, Spain up 0.65, Italy up 0.15, Switzerland up 0.67, and Portugal up 0.21%. Russian exchanges read today, the MOEX down 2.83, RTSI down 2.93%. And the overnight markets, the Nikkei in Japan was down 0.88%, Australia up 0.22%, New Zealand up 1.51%. In China, the Shanghai down 0.68%, Shenzhen Component down 1.62%, China A50 down 0.41%, DJ Shanghai down 0.86%, Hang Seng down 0.79%, Taiwan weighted up 2.12%. Which puppy do I have under here? This is the big one. All righty. All right. So that is all the markets for today. Let's blaze on over to the market recap. S&P 500 rises as softer retail sales and weaker inflation data boost rate cut bets. Well, we shall see. Everyone's hoping for rate cuts. I personally am not. But the S&P 500 rose Thursday as softer economic data fueled optimism for Federal Reserve rate cuts, driving Treasury yields lower and lifting stocks, particularly in the tech and retail sectors. Inflation and retail data disappointed. The producer price index for April dropped 0.5% for its first monthly decline since 2023, with core PPI, excluding food and energy, down 0.4%. This followed cooler than expected consumer price index data earlier in the week, which showed 2.3% annual inflation, the lowest since February of 21. Retail sales fell 1% in April, steeper than the 0.5% expected decline, reversing a March surge caused by consumers front-loading ahead of Trump's tariffs. Bond markets reacted positively to the cooling data, with the 10-year and 2-year Treasury yields tumbling, reinforcing expectations for Fed rate cuts later this year. Corporate earnings this week are Walmart beat Q1 earnings estimates, and maintained a cautious tone on tariffs, but noted consumers remain focused on value. Alibaba missed both revenue and profit forecasts, disappointing investors. John Deere exceeded Q2 expectations, but trimmed its full-year income forecast amid headwinds in the ag sector. Cisco raised its annual outlook on strong AI-driven demand from cloud providers. United Health plunged after news broke of a DOJ criminal fraud probe related to Medicare, piling onto existing woes and a surprise CEO change. Foot Locker shares jumped after Dick's Sporting Goods confirmed it's exploring a $2.3 billion acquisition, signaling potential consolidation in retail athletics. Altogether, signs of easing inflation, slowing consumer demand, and a dovish Fed pivot helped power market optimism despite mixed corporate headlines. Wrestling right now. All right. They want to wrestle and I want to tell the news. So he's going to sit right here while I talk. All righty. Well, next up, we've got a research report or a data report from First Trust, April PPI. You want to pause for a second while I hang on. Problem solved. Just separate the two of them so they don't fight. All right. So let's get to this report. Despite widespread fears that tariffs would stoke inflation, U.S. producer prices fell 0.5% in April, defying expectations and offering a bit of relief on the inflation front. The decline was largely driven by services, where final demand trade services dropped 1.6%, and transportation and warehouse services fell 0.4%. In contrast, goods prices were flat as rising machinery and equipment costs up 1.1% offset declines in food negative or down 0.4% and energy down 1% even. On an annual basis, headline PPI remains up 2.4%, while core PPI, which excludes food and energy, rose 3.1%, a slight acceleration from the 2.5% year over year in April of last year. This suggests while short-term inflation pressures may have eased, underlying price momentum remains intact. Businesses are still recalibrating in response to the evolving tariff environment, with many adjusting procurement and pricing strategies based on anticipated policy shifts. These dynamics have introduced increased volatility in both market behavior and economic data. For the Federal Reserve, the picture remains complex, with monetary policy acting on a lag. Officials are closely monitoring how last year's rate cuts are feeding through the economy. The mixed signals from recent inflation and pricing data will be critical as the Fed weighs its next move. All right, so that's good there. Got three research or data reports today. Next one up is April retail sales, also from First Trust. Mr. Nate Gursey put this together. All right, retail sales rose modestly in April, continuing the trend of record highs, though underlying data shows signs of softening. While total sales increased slightly, seven of the main retail categories have declined, especially those tied to imports like autos, department stores, and sporting goods, likely reflecting the impact of the tariffs. A key metric, core retail sales, excluding autos, building materials, and gas, rose just 0.1% in April. But with revisions from previous months, the gain total was 0.3%. Core sales have slowed notably in 2025, up only 3.7% annualized in Q1 compared to a 5.5% gain year over year last year, partly boosted by tariff front running in March. One bright spot was restaurants and bars, which jumped 1.2% in April, following a 3% gain in March, signaling a possible shift in consumer spending towards services as goods prices climb. In inflation-adjusted terms, real retail sales are up just 2.8% over the past year and remain below their early 2021 peak, underscoring the lingering impact of inflation. Consumers are spending more but receiving less in return. Labor market data shows initial jobless claims steady at 229,000, with continuing claims up 9,000, suggesting moderate job growth continues, though at a slower pace than last year. Not all bad. And last report here, the April industrial production and capacity utilization report. This was also done by Mr. Bryce Gill. All righty, let's get to that. Get my notes up here. Industrial production was unchanged in April, reflecting growing uncertainty tied to the recent Liberation Day tariffs and ongoing trade policy negotiations. The flat headline number was supported by a 3.3% jump in utilities output, which is typically volatile due to weather factors. The real weakness emerged in the manufacturing sector, which fell 0.4%, marking its first monthly decline in 6 months. Auto production dropped 1.9%, likely due to global supply chain disruptions. Non-auto manufacturing, considered a core measure, also slipped 0.4%, its first drop in 5 months. Despite the decline, there were bright spots. High-tech equipment production rose 1.5%, driven by investment in AI and the reshoring of semiconductor manufacturing. Over the past year, high-tech output is up 8.6%, the fastest growth among major categories. Business equipment production has also surged, rising 20.3% annualized rate over the past 6 months. Fueled not just by tech, but also by transit and industrial equipment, suggesting a broader industrialization trend. Meanwhile, the mining sector declined 0.3%, weighed down by reduced activity in metals and drilling, though oil and gas extraction rose modestly. Expect more growth in energy output as the Trump administration pushes new permitting policies. Regional manufacturing sentiment was mixed, with the Empire State Index slipping to negative 9.2, while the Philadelphia Fed Index improved to a negative 4. So, when that's improvement, wow. All righty, got one more article here about Mr. Peter Schiff. Schiff slams Clueless Fed, says Powell is living in a kind of Baghdad Bob world. So let's see what he had to say. I haven't listened to his podcast, this most recent one, so curious to see what this is about. In Wednesday's episode of the Peter Schiff Show, Peter Schiff dismantled the Federal Reserve's latest decision to hold interest rates steady and criticized Chair Jerome Powell's press conference for being out of touch with economic reality. While Powell delivered one of his most hawkish pressers yet, Schiff noted that the stock market ignored his warnings, highlighting a disconnect between Fed rhetoric and market reactions. Schiff took aim at Powell's claim that inflation expectations remain, quote, well anchored, end quote, calling it a blatant misrepresentation. He pointed to University of Michigan surveys showing near-term expectations above 6% and long-term expectations over 4%, far from the Fed's 2% target. He questioned how Powell could describe inflation, the labor market, and the broader economy as being, quote, in a great place, end quote, when risks, particularly for inflation, are clearly mounting. Shifting to trade policy, Schiff expressed skepticism about ongoing U.S.-China negotiations. He argued that China's biggest mistake was tying its economy to the over-leveraged U.S. consumers, whom he called broke. He suggested Beijing may finally shift away from dependence on American demand. To close, Schiff mocked former President, he is president again, President Trump's recent proposal to impose a 100% tariff on foreign-made films. He highlighted the absurdity of punishing one of America's strongest export industries, Hollywood, where the U.S. enjoys a trade surplus. He used it as an example of misguided protectionism that harms domestic success rather than addressing real economic challenges. Throughout the show, Schiff emphasized the danger of political posturing and economic denialism, warning that these disconnects could usher in a serious downturn. There isn't anything he said there that I really disagree with. So, now he's a bigger gold bug than me, but other than that, he's kind of he's over the target. So, all right. Well, that is everything that I had to cover for today. So if anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'll be glad to help. Hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.